All right, so I guess what we'll do is, Joan, if you don't mind, maybe typing in why you exited the Disney trade. So, um, obviously, the entire market turned around here. That would have been a little bit difficult spot to say put a short on at the top, but you can definitely see some entries here right around the opening price, around 112.50, and then it actually sold off, and a little bit of consolidation here. But at that point, we actually took out the lows from a few days ago from last week and had all of this room to go. Plus, the VIX was taking off. The trend was actually traveling higher too at that point. So
Right.
the trend was actually going up. The VIX was going up. And if I'm not mistaken, the ticks actually printed negative 1,500.
Yeah.
You can see better here on the 5-minute chart. And definitely more than negative 1,000. So we discussed that quite a bit. What's interesting too, Marion, is sometimes you can get caught in where the market is so tight that booking profits becomes the right thing to do. But then when everything lines up, you get a little bit trigger happy to take the profits for fear of them being taken away because of the way the market was trading previously.
Right, which I can kind of see because, boy, this was a really whippy market. We went from incredibly positive to incredibly negative.
Yeah, all pretty quickly too.
So I can understand the fear factor there.
Yep, exactly. So not it's definitely something that happens, and I know a lot of people that do scalping as well, Joan, where they scalp for a living. Which I'm not saying that's what you do, but then when a bigger trend unfolds, they're so used to taking quicker profits that they're mentally out of it. For holding good ones. And quite honestly, it's the right thing to do to take the profits if that's how you normally trade, because it's very tough to be a longer term trader and then go back to scalping. It's tough to do both unless you have them in two different accounts, which I know a lot of people do. But getting out too soon, nobody will ever, anybody tells you they do, nobody gets out, holds as long as possible. However, there are two definite things that we could discuss. Number one is an intraday chart with a moving average on it that you don't get out unless price crosses. Whether it's a 10 or a 15 or a 20, it seems to be like the average one on an intraday basis. So for argument's sake, let's say I put this chart here on a 10-minute chart, just for argument's sake. And this is the way the stock looked as it rolled over. You can clearly see this is today's price action as it started to push down here and got, this was the opening price where the entry was. This would have been an area where you could say, all right, slowing down, I want to get out a little bit. But look at where it is relative to the moving average. At worst case scenario, maybe add a second moving average, which is a little bit faster to use as a trailing stop loss. So maybe you have like a 20 and let's say an 8 or something like that. And if it crosses above the 8, you get out, or maybe even scale out of some of it. That's one way of doing it. But then the other way of doing it is if you have a really good entry, then you really got to start to build that argument that like we were talking about before, and actually we talk about every day, really, of what is the market doing, what are the other stocks in the sector doing, if there are any, that you can consider other stocks in the sector, how much room does the stock have to go, how many days in a row has it already moved in that direction, that kind of thing. What's the trend doing? What's the VIX doing? What are the ticks doing? All of that kind of stuff. So as much as we could talk about having a trailing number, for lack of a better way of putting it. It could be a moving average. I don't know about you, Mary. Sometimes I use a dollar amount. Like I remember in the meeting this morning, you had discussed liquidating a certain amount, and then you had a place on the chart where if you said it got down to that level, that's where you would get out of the balance.
Yeah, mine is usually a level. It's not a dollar amount.
So a couple of different ways of doing it, Joan. And like I said, sometimes what I'll do is if I scale out, I'll do the same as Mary, and I'll have like a spot on it. In other words, like if it goes up to 50, I'll be like, all right, I'm going to scale out of, let's say, 3/4 of it at 50, and if it gets down to 49, I'll get out of the balance. Something along those lines. Or if you maintain the entire position, then you could watch your dollar P&L on that and say, okay, if I'm up 500, I'm not going to let myself go down to to plus 400. But that's really more for the total for your day. You want to try and maintain your profits, especially if it's late in the afternoon. But there's multiple ways of doing it. I think there's a trailing stop, and then the other one is adding up how many different things are telling you that the market's all pointing in one direction. And also whether you get intraday volume in that direction as well. If you get good volume on the pushes down and then the volume gets lighter, like it did here, you see it actually rallied, but the volume got lighter, and then we pushed down and volume increased. As long as that continues where volume is increasing in that direction, you can feel comfortable. Let's see, I have a trail, but had an early entry that got stopped out and then became fearful. That's interesting.
Yeah, fear is definitely one of the things that drives us to get in and out of trades at different, probably more out than in. Sometimes it is fear of missing a trade. Then it's fear of, not getting your profit and letting it all wash away.
Do you think, Marion, that is it mostly fear about the money, or is it fear that you don't trust yourself to do something and you want to get out of the position?
I think it's fear of losing the money.
Okay.
I mean, that's what I think. Anybody want to weigh in on that? That's only my opinion from the number of people I've talked to.
Mm-hmm. I know. Earlier in my career, obviously, everybody when you're first starting, you don't want to lose money because you really still don't know what you're doing, and then you become afraid to lose money. Then after that, I found that there was more. It was a deeper fear where if something happened, I wasn't sure if I trusted myself to be flawless in my execution, and that actually started causing me to hesitate.
Okay. Oh, that makes sense.
Yeah, it was interesting when you write it all out and put it in like notebooks and stuff. But Joan, very good job putting the short on, because obviously we talked about it even while the market was rallying. The only thing I would suggest is having something on the opposite side of the trade, and look, there's really no other way to put it. To sound like tough love or whatever, you have to force yourself to follow your rules. There's really no other way to put it, and we've mentioned it quite a bit now. You absolutely 100% can understand if you have a good profit that you get a desire to book it. Marion and I never want to make light of the fact that there's frustration sometimes, and you're like, you know what, I just made $1, I want to ring the register. But I don't know, Marion, I would say at a minimum, scale out of some of it, even if it's 200 shares, take 100 off the table. If you believe, if you want to book profit on some of it, but at least you start to develop the habit of learning how to hold longer.
Right. And then it also gives you more confidence, because I think you need to be able to hold stocks. Any trade, you've got to be able to have the confidence. I mean, I think you'll often hear me say, I'm getting out of some up here.
Yes, yeah.
And a lot of times I will do that. I will get out of some, even though I've been trading all of these years, but I'll let the rest go. So if you feel like you have to get out of, even if you get out of 3/4 of it. What were we trading the other day? And I was like out of 90% of it. I was just holding a tiny little bit for it to go further. But then that'll give you confidence if that whatever 200 shares keeps going, you'll have made money on that, and then you'll have held it, and it'll give you more confidence. Because I don't care what they say, it's really scary to hold trades when you first begin to trade, because it's your money. I mean, I had the luxury when I first started trading, I wasn't trading with my own money.
Yep.
So I got over the fear with using somebody else's money.
I guess if we can give a little bit more specific advice, I would say, Joan, make a definite plan for how you plan to manage profitable trades. And somebody actually asked a similar question later, and I'm going to answer it a little bit differently. But in this particular situation, pick one way and stick to it. Don't pick like I could do a moving average, I could do a trailing stop, or whatever it happens. Pick one. Whether it's putting a shorter term moving average on a chart and say I'm going to hold this unless the price on my entry time frame crosses. So in other words, if you put an 8-period moving average on your 10-minute chart, you're going to hold the trade until price crosses above the 8, or just draw a trend line. Something as simple as that. Whichever one you choose, stick to it 100%. Do not just pick one though. Don't try and have every one of them, because it's going to be confusing. Pick one. Whether it's a moving average, whether it's I'm not going to let it pull back a certain amount, whatever it is, pick one and force yourself to stick to it, and just follow one. Too many of them, a little bit confusing, but just stick to one. right, so we're going to pop into the slides here. We're going to alternate, Marion, between challenge and something somebody wants to achieve on every other slide.
Sounds good to me.
Okay, so the first one, most of the stocks I enter are in obvious trends, but maybe extended from moving averages. Okay, I just want to touch on that really quickly. Extended from moving averages and extended over the last 3 to 5 days is a little bit different. Okay, how do I time entry so that it is after a move? So after a move is confirmed, but before price is overextended. And I think that my answer, and I guess Mary we'll both give an answer, but my answer to this is what I discussed quite a bit in the room, what I would label tape reading, where I am hyper focused on what the stock has done the last 3 to 5 days. I don't necessarily use the moving averages to notice that often how far the stock is away from it, unless it's very far away from it. And if it is, then it's probably far too overextended to feel comfortable for me personally. Because if it's too far away, then price has really gone parabolic. You should probably still be long or short that stock, but it becomes a little bit different. I think I'll talk more a little bit about normal price action. And to me, it's what has the stock done over the last 3 to 5 days. And if we are in, let's say day 1 through day even 4, I'm still comfortable with wanting to be long. I don't necessarily consider that too overextended, but we start getting towards day 4, 5, 6, and 7, like we had in QUNR recently. You could still trade it long, like we had 10 out of 12 days, I think. But as you start to get up here, we had a pause. So we actually had a 2-day pause. So regardless of where the stock was from the moving average, we had a 2-day pause here. That's important. The stock actually consolidated for 2 days. So where it is from the moving average is not as important as the fact that it's above the 2-day moving average. Does that make sense, Marion?
Yep. No, it does. I definitely think where the moving averages are, I'm aware of them, but it's not the first thing I'm looking for. I'm actually also looking for, like what Pete said, what it's done and where it's sitting. Is it consolidating after making the extended move? You know how we say this morning we were talking about that. Up, consolidate, a couple days up, consolidate, up, consolidate. That's what you want to see. If it's doing that, you can still get in. But like Pete said, if it's up 5 days in a row, can it still go up? Definitely. What's the probability? Probably not great. So look to what it's done. Don't look. The moving averages, you should be aware where the moving averages are, but I don't think that the first thing you look at, especially if it's above it, and you want to buy that, you want to say, okay, there's a plus for the stock.
That's exactly how I look at stocks. I do the same exact thing, Marion. You're definitely aware of them, definitely paying attention to whether or not they're in the right order. Maybe we'll take it a step further and notice how many days in a row a stock has closed above the 20-period moving average, which shows good short-term relative strength. But it's because of the window and the time frame that we trade in, I think it's much, much more important to pay attention to the last 3 to 5 days than necessarily with how far away it is from the 20. And I think this stock here is a really good example, this QUNR, because it's definitely well above, but it did consolidate here for 2 days. So where it is relative to the moving average is not as important as the fact that it took a 2-day break and then had another nice 3 days that you could have been comfortable bidding into. So I think that's important there to put that into context there. So how do I time the entry so that it's after a move is confirmed, but not before the price is overextended? That's exactly how. Just make sure that you're not getting consecutive days of 4th, 5th, and 6th days. So you're not considering it overextended yet. So the moving average part there is really nothing more than, okay, it's above the moving average and is sloping type of thing. Let's go to the next one. A challenge. Actually, there's a goal to achieve. To become confident in a rock-solid trading strategy and be comfortable with the timing of my entries and exits. I love the terminology here of confident and comfortable. It's interesting because a lot of people trade for the money and whatnot, but it's really the feeling of making that money. We want freedom. We want to be confident. We want to be comfortable, that kind of thing. The only caveat that I would say about this goal, and I actually was specific on the forum to ask everybody to put that in there, is to be specific about what the goals. Now, even though this is how we want to feel, confident and comfortable, those aren't goals. And it's interesting because that's not specific, measurable. it's a feeling, but it's not something that's necessarily a concrete goal. Now, what is a concrete goal in this goals to achieve is completing a rock solid trading strategy. That's absolutely quantifiable, and be comfortable with my timing of my entries and exits. Now, what's interesting is be comfortable with my timing of my entries and exits is in your trading strategy. So out of all the goals to achieve for this person, you want to feel confident and comfortable, and you will feel confident and comfortable because you have a rock solid trading strategy. So out of all the stuff that's on the slide here, this person needs to sit down and write down exactly what their edge is, exactly what their entries and exits are, which includes stop losses, share size, risk management, how to book, like we just talked about with Joan, what are you going to do if a trade moves in your favor? What is the checklist for me to determine I'm in scalp mode, or I should say get out into momentum mode versus no, like last Friday, everything's going in one direction, especially in the afternoon, I'm going to hang on to this. You know, if you get in at 2 and everything's doing what it's supposed to do, internals, everything, make an actual checklist for that. And you know, we talk about it quite a bit. You feel confident and comfortable because you know exactly what you're looking for, and you're forcing the market to look that way. And then you're confident because you believe that, number one, you believe it works, and number two, you believe you'll follow it. So again, entries and exits are part of the trading strategy. I feel like I'm giving a marketing class here now too. It's confident and comfortable is what we actually want to feel, but this part here is what's really important. But this part should be inside of the trading plan or trading strategy.
But I think what's going to happen is you're going to be confident in your trading strategy when you see it working time after time. Sure, it doesn't always work. Trust me, we all have those losing trades. I had one in Amazon the other day. And but once you, and then you can tweak it a little. Believe it or not, Pete and I use a lot of the same trading strategies, and we never traded together.
Yep.
And I'll say this. Don't over use technicals. There is probably 500 different technicals you can use. RSI, Bollinger's, 1,000,001 different moving averages. You want to keep it as simple as you can, because you know what? You've got to be able to make a decision really quickly. You can't be looking at Disney today and saying, okay, now let's see, where are the Bollinger Bands? Where's the 200-day moving average, the 50-day, the 21-day, the 8-day, with all the different ones people are using. Where's the RSI? Then the trade's gone from you.
Yep, so, I agree. No, it's actually good advice, Mary, not to have too many, because it's very easy to have everything. And you know, to touch base on what you had just said, that we've never traded before, I would say that most of the experienced traders that I know, and you know, obviously we've been around a little bit, most of the experienced traders I know do not use fancy gadgets, or you know, whatever. They don't use all the fancy stuff. Most of the traders I know, it's basic moving average, candlesticks, and volume.
Let's ask Steve what he uses.
He actually logged out. He said he's gonna pop back in.
Oh, okay. So
yeah, no, I agree. That's a good point, Mary.
And as long as you can have it on your screen all at once, so that you can. And trust me, after a while, you'll be able to look at it. Like, look at this Disney screen, and your eyes will go between the volume, between the 20-day and the 50-day. You'll see where the patterns are. You'll be able to see it. If you have too much going on that screen, you know what? Your mind is going to go in different directions. You really have to keep it simple. If I've learned anything over all these years, is simple is better. Not too simple so that you can't see anything, but enough so that it can give you a clue as to what the stock is doing.
Yep, and out of everything that you could be putting into your strategy, all the tactics in the world don't matter if you don't believe you have an edge for identifying whether or not you want to be a buyer or seller. And I know we oversimplify it sometimes, but it really boils down to, can you look at a chart and say buyers or sellers are definitely in charge? Is it not overextended? If not, then what is my entry signal? That is the crux of a strategy. And then it's just a question of share size and that kind of stuff. If you can't give a definitive answer to whether buyers or sellers are in charge, you don't have a chance. You need, whether it's, again, you know, you guys see this. This is what our chart is, or you know, in the morning. It's a daily chart with two moving averages on there, and a weekly chart, and that's it. We draw trend lines on the weekly chart, support and resistance levels, and then we're looking over here just to see, is it overextended? Is it above the main moving averages? Is it stuck between the 20 and the 50? Which also, that's actually something interesting too, Marion. I hope everybody's starting to notice when Marion and I point out a stock is now stuck between the 20 and 50, that is it's the first sign that a stock is rolling over. And the longer it starts to sit below the 20, and in this case, a stock that was in an uptrend, the longer it starts to sit between the 20 and 50, the greater likelihood it's going to roll over. And we're seeing that a little bit in Disney today, or actually a lot. That's a pretty good downtrend there. And that's not a hard and fast rule. That's actually one thing I also want to point out to everybody. Some of the feedback that we got was call outs that we make being absolute. You always have to remember trading is like driving. You got to expect to make adjustments in how you manage, but not adjustments in your plan. There's a big difference between the two. All right, so next one, if I have a successful trade, when do I get out of it, assuming the price is not nearing resistance? This is actually kind of a common question. You know, literally it's off the charts type of deal, right?
Right. So let's see, where do I get out, assuming the price is not near resistance?
So I guess we're also assuming a long here, right?
All right, so it's not near resistance. What are your bars telling you? Do you have a topping tail there? Do you have a topping tail in down? Do you have an inside bar in down? Those are what you're going to be looking for. You're going to be looking to some clue that the buyers have left and sellers have come in. That's what you're looking for. A topping tail is telling us there's more sellers than buyers. Inside and down is telling us the same thing. What do you think?
Absolutely. As far as like looking at those particular type of candlesticks on your intraday charts, and let's say the 5 or the 10 or whatever time frame you're watching, I think I would take it a step further or differently. And it's something that we actually spend a lot of time talking about, which is the average true range. Average true range is the actual number that a stock trades from high to low over a certain period of time. So if I just slide this over a little bit, you can see on the bottom here, the average true range on the daily chart, we have it set for 14. That's basically the default for everybody. You can set it to 20 and say it's the last month or whatnot. But on this particular stock, Disney, it's $2.18. So again, with Disney here, let's just say for argument's sake, it did not have this support coming up and it was starting to push down and you're literally off the charts here now. Or let's say tomorrow. Let's say the stock opens flat tomorrow and starts trading lower, $2.18 from the high down to where you would anticipate the low. That would be the spot where you'd be managing a successful trade to. Now, we've made it clear multiple times. That doesn't mean to get out, but it does mean that you might want to trail it a little bit more closely. It might mean that you might want to take a little bit off the table, but then you also have to calculate how much has the stock moved the last 3 to 5 days. Is it well bid the last 3 to 5 days, meaning is it higher highs and higher lows for the last 3 to 5 days? Is it one day down, inside day, and then down? Because Marion actually had pointed this out this morning. I forgot what stock it was, but although this is 2 days of selling from this day to this day of last week, it's actually a 3-day consolidation. So I don't really, even though that is selling, I'm more, all right, now I'm shifting to this, sticking with the 3-day rule. This is a 3-day consolidation with a breakout, or in this case, a breakdown. And then we go into another 3 days of consolidating. And now this is the first day out of the breakdown. So do you guys start to understand how I guess, Marion, we never really had this conversation, but we put a lot of emphasis on where the stock is and what it's done the last 3 to 5 days. And you shift to well bid, well offered, consolidate, which is also why we watch the inside days. That's a consolidation, and you're looking for a breakout. So when you combine that with where it's gone over, if you look at the weekly chart and look at the last year or 18 months, whatever time frame, and then you go over here and you're like, okay, the 20 is above the 50, but now the 20 is pointing down. That's not good. Price is stuck in between the 20 and 50. Also not good to be having a really strong bias. We pointed out this morning that it pounded, kept tap in the 50. We must have set it for a half an hour today. As a matter of fact, I was singing it this morning. And then we finally rolled over. So as it started to roll down, now you can say to yourself, all right, average true range is $2.18. And the high is 113. And we have now found short-term support down here at around $2.20. So almost exactly the ATR is where the stock got this bottoming tail. And that just happens to be lucky for this illustration. But we're talking about from the high here to here, That's the ATR of what you can see down here in the bottom, $2.18. So in my experience, again, kind of getting back to what Joan, the point of Joan's comment before, um, pick one definitive way of trailing a stop. And if it's especially you want it, you're possibly looking for a spot to maybe not get out, but definitely tighten up a trailing stop loss. The average true range, in my experience, is a really solid way to have a definite number without needing to guess.
And yeah, and it means heads up there. A lot of times it's a big news day, earnings, whatever. The ATR can be really skewed in a $2. I think Pete was trading CVX one day, and it's $1.50, and it went up $3.50.
Yeah, that's actually true. It almost doubled what it normally did that day.
Right.
Yep. Okay, so let's we'll move on to the next one. Hopefully, we got enough detail on that one for you guys. Next one is education. To learn as much as possible about what makes a good trade decision. That's a good thought process. Yes, I'd like to make money, but I may not have the time to spend watching for signals to go in or out. I'm not sure what that means. Do you understand that, Marion?
Let me see. Let me read it again.
I may not have the time to spend watching for signals to go in or out. And now finish up the last part.
In other words, they're busy doing something else.
Ah, that's interesting. That's interesting.
So that's more like you're talking about a long-term trader than a swing trader, and you're just going to do levels and put your. That's not kind of what we do in the room, so that's kind of a hard question to answer, because I'm going to guess that means that you aren't sitting in front of the computer all day, and that you just want to know where the levels are to get in and to get out, which we can definitely tell you, or you can learn through technical analysis. Also, to get in on a longer term one, you really need to know the fundamentals behind the company. So
yep.
I wish we could clarify this.
Well, I think you're absolutely right. I think the person is saying, I don't have the time intraday to be watching it for the signals to trigger. I think that's basically how I'm reading it.
Right.
But the other two parts of the goals to achieve: education, learning as much as possible. So that's the right thought process. So you want to learn as much as possible. However, I want to stop you from doing something that I did, and I got caught in this vicious education loop the first 2 years that I was trading, where I constantly felt like I needed to know more. And after all of those books, all that education, and again, I'm not saying not to learn more. You absolutely want to learn how to take your trading to another level. Everybody could learn how to do that. Myself, Marion, everybody. You can learn how to hedge. You can learn how to do a whole bunch of other stuff. Okay? Absolutely learn how to do that. However, in the beginning, when you feel like you really understand learning how to read charts, at some point you have to start to apply the education to, number one, see if you could follow it. Number two, if it matches your personality. But let's take that even a step further. This person appears to be saying, I'm busy and I can't watch the intraday stuff as much. However, I make this very, very clear for those of you that have downloaded the Trading Plan Formula PDF, or have actually the PDF is free on the homepage of the website. You can go download it. But if you actually enrolled in the program, I make it extremely clear where I answer this question, because I say very clearly, you have to bring certain resources to the market, which includes time. And you must match how you plan to trade with the amount of time you can devote to the market. In other words, how much are you actually going to sit in front of a screen? If you can't sit in front of a screen, if you're trying to do it while you're doing a different job, which, look, let's face it, a lot of people do, the less time you can devote, the more you're going to be relying on putting in stop orders and trading around, that kind of thing, where you're putting in buy stops, sell stops, or that kind of thing. And if you're not comfortable with that, or it doesn't match your personality, then you have to drop your time out and maybe swing trade options or swing trade stocks. At least I think that's the way. I think you interpreted that correctly, Marion. So basically my answer is match the time that you can sit in front of a screen to the trading style that matches that. So, it's tough to be a day trader when you don't have the time to be a day trader.
Right. I definitely agree.
But that's a good question. But that's, what, it's actually exciting, because they're really thinking it through, which is good. Next, we have two challenges in one, kind of the same. limited time to trade and limited funds. I guess we kind of just answered the first one. Limited time to trade means you have to run business around your trading business around the time you have available trade. The limited funds one, the obvious answer is if you want more funds, go and get your license because you'll be able to have access to as much capital as you prove you can handle. If that's not the case, and again, Marion, you would be able to speak to this better than myself. If you still want to participate in some of the stocks that can move a little bit more, for lack of a better way of putting it, because you have limited funds, you can't. You might want to consider trading options because the leverage is different than tying up or needing a certain amount of stock to be a certain amount of buying power to be available to trade and leverage stocks on 2-to-1 or 4-to-1 margin. However, Marion, you might want to give a little more. You and I have had this discussion a couple of times about the differences between trading stocks and options. There's a lot more to consider than just buying or selling if you're trading options.
Right, and we are going to have an option course. We're going to start having some lessons in it because it's. We go over. I mean, Robin, you good? Is Robin in here right now? She's a good options trader. She came off the options floor, and I was actually on there also. And there's also risks. And once you learn how to minimize those risks, then options can become a really, really powerful tool. So you need to learn it first. You can't just, there's a reason why you buy it at a certain price and why you stay away from them at a certain price. So I think if you want to trade options, we are going to, after the first of the year, isn't it, Pete? We're going to offer an options, some option lessons.
Yep, exactly. So the first one, time to trade, is definitely something to consider when you're creating your trading plan and your trading strategy. You have to be honest with yourself about how much time you have to sit down and actually watch it. And the second part, limited funds, there's two choices. Number one is to get your trading licenses. There's plenty of prop trading firms that you can apply to, and it's really just a question of how much you can study. And the second part is consider trading options because the leverage is different, but do not trade options without a good options trading education. There's a lot more to it than just wanting to be a buyer or a seller. Right. You can be completely right on an options direction, but lose money because it didn't happen within the time period, which means you need to learn option pricing.
Right, exactly.
Let's see. Next we have one of the goals to achieve is to share size appropriately when entering trades. And the second goal is to make $1,000 per day consistently. Marion, what do you think on that second goal first, if you don't mind? Somebody setting a goal like that.
I'd say this. Start off slow because I'll tell you the most amazing thing. Let's say you say, I'm going to make money. It doesn't have to be every day. Don't say I have to make $1,000 every day because Pete and I even have losing days. There are days when I have negative on my account. And is that bad? No, because like last Friday, I made a lot of money. In other words, you have to say, I want to make $5,000 a week. Don't say I want to make $1,000 a day because at the end of the day, and you've only either made $100 or you've lost $100, then that erodes your self-confidence. Better than that, say I want to make $20,000 this month. The month of December, I want to make $20,000. Don't say it every day. That is horrible for your self-confidence. So all of you out there, just do it from December 1st to January 1st. I think even a week is too short. Do it for a month. Say, in this month, I'm going to make this amount of money.
I'm actually glad that you changed that because I agree with 100% with everything you just said because I used to set goals when I first got into the business. And actually, interesting, if Steve pops back in, I know Steve actually does set daily goals. Maybe he can chime in on that if he comes back in. But I am not a big believer in setting daily goals because I'm trading probabilities for the month. I'm trading probabilities for a whole bunch of trades. And when you get to the point where you're like, okay, if I know what I'm doing, my strategy works, and I follow it, that means I need to make a certain amount of trades for me to get paid. And that's not the amount of trades you're going to make in one day. So you're literally shooting yourself in the foot if you're saying on a daily basis, I need 3 out of 5 trades every day to make money. You know, whatever. I'm just using a number. That's really difficult to do. That's really difficult to do unless you're a scalper and you're just going back and forth and taking nickels out of the market all day. But that's not really what we're talking about. So I think your advice, Marion, is 100% the correct advice. Trade for the month, not for the day. It's very, very difficult to trade for the day.
Also, and I don't know if you're a brand new trader or not. If you're a brand new trader, don't say $20,000 a month. That's a really noble yet really tough goal when you first begin to trade, because what you really want to do for you is that you want to have a certain number of your trades be successful. I mean, I don't know what you feel about this, and maybe make, $2,000 a month or $5,000 a month. Because when you start off small and you get to learn exactly your trading strategy and what works and what doesn't work, you're not going to lose all your money. I hate for a new trader, and I don't know if you're new or not, to lose the money learning, because we all have a learning curve. So if you're going to make $1,000 a day, you're going to have to trade size.
That's true too.
And I don't want you to lose on that either. So, and if you're not, then yeah, you can do $20,000 a month if you're not a new trader.
And if you're well capitalized.
Right, and you have to be well capitalized. That's the only other thing.
Yeah, because it's going to be, if you're trading with $10,000 and you want to make $20,000 per month, it's going to be very hard to make 200% per month.
Yeah.
Very difficult. Very difficult. So again, that's our thought process on that one. Stretch your goal out to what you want to make per month, and then make it your day-by-day basis to trade flawlessly, not necessarily to make a certain dollar amount per day. Because at the end of the day, take professional athletes. There's a reason we use their average. We don't calculate what they did every single game. We track what they did every single game, but it's what they did over a longer period of time, and professional traders should strive to be the same way. The second part, to share size appropriately when entering trades. I don't know that this is a blanket answer, because there's going to be certain trades where you are bidding into really heavy support, where maybe you can have a little more share size because it is a really obvious support level, versus as a stock is moving in your favor or trading higher, there's less spot. So I think then you got to work the order a little bit. Either way, share size appropriately when entering into trades. As it moves in your favor, you want to add less shares. As it's moving higher, you don't want it to make it top heavy, so that if it starts to pull back, you give back existing profits. But I will say this, and this is something that's worked for me for a long, long time. My share size is 100% dependent on the volatility of the stock, how much I'm willing to risk per trade, and then I adjust my share size for the difference. So if I want to risk, again, I'll just use simple numbers. If I want to risk $100 per trade, I'm going to take the difference between my entry price and my stop loss and adjust my share size to compensate. For some stocks, that could be 50 cents. For other stocks, that could be $3. The dollar amount I'm risking is not going to change. What's going to change is my share size based on how much I have to let the stock fluctuate. I don't know if it was the same for you on the floor, Marion, but for me, when I first started trading, everybody traded 1,000 shares every trade, because you were only scalping teenies. You were just going back and forth and buying at 20, selling it at 20 and 16th. Shorting at 20 and 16th, buying it back, and everybody knew, okay, 1,000 shares was $62.50, and that was it. Everybody's machine was set for that. But when you get out of that and you weren't scalping fractions anymore, you actually had to learn how to work share size. And for me personally, that's the best way to do it, is to adjust my share size to volatility.
Well, I definitely do that also. No, we did trade. We didn't trade for teenies, because remember I traded the $100 stock. No, we traded for dollars sometimes.
Okay. So either way, share size appropriately, in my opinion, in my experience, has to be based on volatility and how much you're willing to risk per idea, and then you're going to have to adjust your share size to match that. It's very difficult to trade the same share size all the time. You can trade the same dollar amount, but not the same share size.
Right. If you're trading in Amazon and you've got to put $3, limit in it on either side, it's a lot different than if you're trading Bank of America, where it's literally 25 cents.
Right, exactly. All right, next we have learning how to be more patient and wait for the best setups and to manage my trades better. Kind of all the same thing there, right? Being patient to manage.
I would say this. Patience is probably the number one um, goal that everybody should set for themselves. And I probably say it too much in the room. I say, okay, let's be patient. Let's be patient. Not for only your sake, but for my own sake. I'm trying to convince myself, be patient here. Wait for the trade. Wait for the trade. Because I have like an A-type personality and I want to trade. And if there's no setups, I still want to trade. But I'm trying to convince myself, no, be patient. And I'm trying to convince all you guys, be patient. If there's any personality trait that will win you can win this game in patience. You have to have patience and waiting for that best setup, even if it means not trading. You know why? Because if you don't take that bad trade, you're not going to lose money on it, and then you don't have to make up that money plus the money you want to be making.
Yep, I think I could definitely add to that just a little bit. I mean, first off, it's incredibly difficult to be patient if you don't have a strategy, because then you're not sure what you're being patient for. So in other words, if you have a strategy and you say, gosh darn it, this is how I make money and I'm only going to risk money when this happens, then you're not really being patient. You're just, I guess you are being patient, but you're choosing not to risk money unless your strategy is unfolding. So that's one part of it. If patience is challenging, now again, let's also discount what Marion said, because we've all definitely done that, where you're antsy and, whether you're type A or whatever it happens to be, and you want to be in a trade, or worse, which this is worse, you have to be in a trade because you feel like you have to make money. That's a tough situation to be in. And I've been there. Go get a night job. Not work nights and weekends. I've done it. There's no shame in doing that, because all you're really doing is proving to yourself how bad you want to be a trader if you do what you're supposed to do to go and get a night job and help pay the bills while you're learning how to trade. I did it. I'm not shy about it, but I don't care who knows that, because I'm here now. I did what I had to do, But the other side of that is, when you really understand and believe your edge works over time, and I don't say this lightly, I mean this really strongly. I don't have a hard time being patient because I understand all the trades that I make that don't match my strategy are 80% of why I'm not making more than I should when I take them. Because again, we've discussed this a few times. If 10 great trades is how you get paid and you do what you're supposed to, let's say you take 10 trades and 4 of them were not your strategy. Now you not only have to make back what you lost on those 4, assuming you lost money on the 4, even if you broke even, but now you got to make enough trades to get back to 10 good trades, which could be more than just simply making four more trades, depending on what you lost on the 4 trades that don't match your strategy. So just close your eyes and imagine I have to make 10 good trades. Now close your eyes and say, okay, I made 4 trades that are not my strategy. So now I'm pushing it out and I need to make 14 trades minimum to allow my strategy to play itself out. So you're literally pushing out the time it's going to take you to make money with every bad trade that you make by not being patient. So to me personally, and again, I can't exaggerate. I'm not exaggerating about this one. It's not difficult for me to be patient because I scrutinize my P&L and you read it and you're like, I'm not getting paid enough because of those dopey trades. Now I don't have to be over anxious because I don't want to lose that money. And I have this mantra, and it's on my monitor. It's actually on a Post-it pad. Make it a goal to lose money on great ideas. And there's nothing more complicated than that for me, because I understand how much it costs you. There's an old little mistake that cost you $25,000. It seems like nothing on a trade-by-trade basis because you're like, I lost a little, but it adds up over the year. It becomes a real number at the end of the year. So, there's two sides of it. Be patient and wait. Don't trade because you want to. But then for me personally, on the other side is I am patient because I understand how much it costs me, and I'm pushing it out longer for me to get paid if I take trades that don't match my strategy. But all of this, waiting for setups, managing trades better, being patient, that presupposes you have a strategy in the first place. So if you're trading off the top of your head, you don't have a strategy. So make sure you do have one to make that matter in the first place. Let's see, next, goals to achieved. I have veered from my main expertise of options trading and will concentrate more on watching volume and volatility to find stock selection. I guess I'll take the first part of this, Mary, maybe, or if you can chime in after me. But concentrating on watching volume and volatility to find stock selection, I can't stress enough how many traders I speak to that don't first filter out their stocks to determine if it meets their volume and volatility criteria before they look at setups. So in other words, actually, you know what? If you don't mind, I'm actually going to pull it up on my screen. Let me, if you want, Marion, I'll pull this up. You can give your on that.
I'm sorry. I'm sorry. Why?
If you want to
What you want me to do?
take a look at the slide and see what you think.
Right.
So I'm basically just going to pull this. Everybody knows we use FinViz during the day. I'm going to basically just walk you through the point of what I want to make on this slide where it says concentrate more on watching volume and volatility to find stock selection. So out of every single stock on Wall Street, the first thing I'm going to do is I'm going to filter out the stocks that first meet my volatility and my volume criteria before I look to see which stocks I want to trade. So I'm going to look, and again, I'm just going to use the numbers that I actually use in the morning. Minimum of $15. And I'm going to go a little light here. Let's say at least $1 average true range, which that's even a little bit light. You know what? Let's actually go $1.50. So that's the volatility. So now over $15, and it trades an average of $1.50 during the day, just for argument's sake, from high to low. I'm going to use average true volume of, average volume of around 2 million. So out of all of the stocks on Wall Street, I'm making sure there's institutional participation. I'm making sure that it moves enough, and I'm making sure it's a certain price that will also help it move enough. Now, if I want to take it even a step further to say, well, I want to make sure it traded actively yesterday, that tells me there's a little bit of activity, I could even filter that all the way down even further to say I want to make sure that yesterday, or in this case, the market's open today, is doing at least what it normally does. So basically, if a stock averages 2 million, I want right now it to be trading at least 2 million. And out of all the stocks that I could look at, only 68 match that criteria before I even go in to look at the charts. So let's say now the market's getting hit. Now I'm going to filter this by change, and that means that the charts on top will end up being stocks that are negative right now if I want to scan for new opportunities. Now, let's take that even a step further. We all talk about relative strength and relative weakness a lot during the day, right? So let's say now you see these stocks, some of these are strong, right? So I want to say now I only want to look at stocks that are below the 20-period moving average that also match all that criteria. So that knocked out 16 stocks. Now I want to say I only want to look at stocks that are down for the last week, which is the last 5 days. So now I've filtered all of that down even more to 47 stocks. So now I have, first, it meets my criteria of volatility and volume for liquidity and institutional participation. It moves at least $1.50 a day, so I know I have a chance to make money. And again, we've talked about that. If you trade stocks that don't have a decent range, you're not going to lose any money, but you're not going to make any either. So you got to that fine balance between the two. And then I filtered it down even further to down the last 5 days and below the 20-period moving average. And they're down the most today. So the top list here, and actually, you know what? I'm going to even filter this even further. I'm going to take ETFs out. So I just took out another 15 stocks. So now it's only stocks. So now you look at the stocks, and let's even take that a step further. MUR is below support, so that has room to go. TSO, not really. It's at the 50-period moving average. So now you filter it down and take a look. So to get back down to this question, watching volume and volatility, before you even look for stocks to trade, first sort by volume and volatility, then maybe by price, then maybe by what it's doing in the most recent price action to determine longs and shorts. So a lot out of this question, but that's exactly how I do it every day if you guys want to copy that. All right, we'll go to the next one here. Trading challenge to overcome, having better stops, limit the number of stocks to watch, and find myself all over the place sometimes. What do you think about that, Marion?
You don't have a real trading plan then if you're all over the place because you're not taking just the best trades. Are you jumping onto everything else everybody else is calling out? If someone calls out, long, because we were watching Teva, long Teva, do you jump into Teva without even knowing why you're in there? Is that how you're getting all over the place? Usually that's what it is. It's you're piggybacking on everybody else's trades. And let me tell you, that is never a way to make money. You've got to be, because you're not going to be confident in your trade if you're in there with other people, if you've only gotten in there or out of it because other people did.
Yep, exactly.
And not knowing the reason why you're in or out. It's fine getting in with other people as long as you know the reason.
And even if other people are calling out stocks, let's just say for argument's sake, like we're all in the room together. Let's say somebody's calling out stocks. if you normally trade stocks between $30 and $100, and we call out Amazon, that should not be even anything you remotely even consider wanting to trade. Maybe you take a glance at it to look at the setup, and you'll say, okay, I see why that's a long, or I see why that's a short. But you should know like that in a heartbeat whether or not it's a stock you'd even consider trading. So even if you would consider yourself saying, I'm being pulled into other ideas, you could look at other ideas, but that doesn't mean you should seriously be considering them, because if they don't match your criteria, it shouldn't distract you at all, quite honestly, other than looking to see if you agree with it a good idea or not. And the better stops part, that's just got to be more definitive. That's
Better
just,
stops.
yeah,
I
that's
don't
just,
understand why you put the stops where they are. If you just put a stop randomly, like when somebody said, "Do you put it at a dollar amount?" I never put it at a dollar amount, because what if your dollar amount is 5 cents under resistance? I mean, or 5 cents over resistance, and it goes through it, or 10 cents over it, and you've stopped yourself out, and the stock is going to the moon. I put my stops at support and resistance, where I know it's going to have trouble. Because first of all, I can watch it there. If that's going to be my stop, I can watch it at that point, or I can get out, and then I can even change my stop if it gets through it. But be careful where you're putting your stops and the reason why you're putting it where you're putting it.
I was always taught to put it just outside the market noise, or just outside of support or resistance. And then if you have to adjust your share size a little bit to be comfortable with putting it out that far, that maybe drop your share size by 100 or 200 shares, or whatever,
Yeah,
whatever the share size is. But there was a good example of that in Teva this morning, where the opening price was a really good level. So you can see it here better on this chart here. If you shorted here, your stop loss might not have been the opening price, because the high of the day was so close. It would have been more likely to have been the high of the day there, or above the high of the day. But you should be able to spot on a chart and say, all right, that's a significant reference point, or that's where, like, obviously we talk about the opening price every day. Buyers or sellers, all right, that last time at the high of the day, I'm going to put it up there, or I'm going to put it here. Whichever one it is, just make it a point to say that's a reference point that I use all the time. That's the stop loss I'm going to use. If the open and the higher the lower are very close, I'd lean towards the higher the lower the day, because you don't want to put a stop that's only like 10 cents away where the real significant number is.
Right.
But be definitive. That's a lot of the what we're getting across today. Be definitive. Next is, as a goal for next year, trying to swing trade more ideas. The big thing I would say here, which I think is a pretty broad statement, but I think most people would agree, if you're swing trading and day trading, if you can afford it, I have found that it's much better to have them in separate accounts.
I totally agree, 100%.
It's challenging to watch that P&L in the same account.
Yeah.
So
And also, if you want to trade the same stock, like I will trade Facebook, not right now, but I do. But I also have some long term, and if they're in the same account, they're going to wash each other out, and then you're not even going to remember where your short term trade was. It can get really frustrating.
Yep. So that was a pretty easy one to cover there. Holding on to winners and selling too soon. We covered that a little bit today, using the average true range, paying attention to whether or not it's extended 3 to 5 days over the last 3 to 5 days or not. Actually, Google and Amazon are decent examples right now also to talk about the fact that they both have really solid resistance, and that would lead you to not be holding like the last 3 weeks here. Clearly, we were talking 780 today in Google, and Amazon also had clearly 680. So in this circumstance here, anything long, I'd be more inclined to be exiting into that really obvious resistance, and then maybe being a little more aggressive if it got up and through that level. So I think holding too soon, definitely looking at what the stock's done the last 3 to 5 days, whether or not it's actually up and at or near resistance, like we were talking about. Oh gosh, what was it? I think it was DLTR, if I'm not mistaken, where it's had some really nice moves, but also coming into resistance up here. So you can see it was coming up to a level where you wouldn't expect it to follow through. So if it's already moved a decent amount and you're coming into resistance, you would tend to not be holding for that and squeezing that little bit extra because of how much it's already done over the last 3 to 5 days. Let's see some more goals to achieve. First outcome is to be profitable. Next outcome is to follow my plan and build my month, and hit the good days and protect on the days do not match my criteria.
Oh, wow. That is a great one. That's
Yep.
so.
I agree. I agree.
Okay.
This particular person has a really solid idea of what they want to accomplish. It's really more of a mental execution uh, um, for this guy. And actually, from going back and forth a little bit, um, sometimes it seems like it's just everything is taking a little bit too literal. Where you gotta understand that um, you don't need to know what's going to happen next, but you need to know what you're definitely going to do next. And when you lighten up on yourself and don't put as much pressure on yourself, it's a little bit easier to manage. But these are they might not be specific enough because they don't necessarily know like what I want to do for the month or anything like that. But again, that's all relative to how many shares you're trading. But absolutely the right thought process for the goals. Absolutely. So now the next part, challenges, and I believe this was written last night. So Goldman Sachs triggered a 950, $1.20 move into a 10-minute bar. Feel I need to wait for a pullback to get a better price. At the same time, on December 2nd, Netflix broke out, never looked back, no pause, and let alone the pullback. I know every situation is different, but it's driving me nuts. That's a mouthful, Marion, right?
Yeah.
But I will say this: this is somebody who really took the time to write what they were thinking, so they can get an answer. So I absolutely applaud that. They put some time into what's going on in their head, which is awesome. But I actually think that they answered their own question, though.
Mhm.
I know every situation is different. The driving me nuts part, I kind of mentioned that a little bit in this morning's meeting, where I said, look, I said, you're going to have to accept the fact that most of the month is going to be you're going to have to work for it. You're going to there's going to be days that are going to drive you nuts, and there's going to be certain days like Netflix had last week and even yesterday where it just exploded and had a really solid uptrend. You need to have a checklist of criteria in the beginning until it becomes a part of who you are and how you make your decisions. You need a checklist. And Mary and I go through it every day. Mary and I, here's what the VIX doing. Here's what the trend's doing. Here's what the ticks doing. Here's what other stocks in that sector are doing. Here's what the spider's doing. You need that checklist. And if you have 7 out of 7, be disciplined and have a trailing stop loss if you're in a good trade. Again, I'm just using 7 as a number. If you have 2 out of 7, you can be a little bit more inclined to trade the stock specifically and um, uh, maybe not add as aggressively or that kind of stuff. There's definitely situations where the stock will do something that it's going to do no matter what the market does. But I would say a good spot to start is to have a checklist that tells you what an awesome trade is and stick to it. Literally use it. Put it in a spreadsheet. It does. I mean, you can put 40 columns in a spreadsheet. It'll last your week. Just have 7 rows and okay, this needs to look this way. This needs to look this way, and check them off. How much room do they have to go? Where are they the last 3 to 5 days? That kind of stuff. I think once you get to the point where you really know what you're looking at, then you really need to be specific. I don't know if there's any other way to word that.
All right, I agree.
Next, second outcome is to build my share size. And again, this person clearly is answering themselves. They know exactly what to do. Currently trading 100 shares until I prove that I can follow my plan and my idea is going to increase share size 100 shares at a time after 1.5 profitable months.
Wow.
You're
I
saying
applaud this person.
yeah,
Most people don't do that.
saying all the right things. Saying all the right things. It's really just a question of following it. But I will say this too. I could feel a little bit of intensity coming through the text. Um, give yourself a chance to trust yourself and enjoy trading. Don't let it drive yourself nuts. Trading is, and again, I tend to gloss over this a little bit, make it sound like it's easier, and it's not. I'm not by any stretch of the imagination saying it's easy. However, when you know what you're looking at and you believe you know what you're looking at and you've proven yourself that it works, you just have to lighten up a little bit and just follow your plan. Don't get mad that the market turned around. Don't get mad that you got stopped out. Like I had like a few years ago, I had this thing where like I had a talk with Mark Sperling a few years ago, and I'm like, well, how do you feel like when you're up 2,000 in a trade and it comes all the way back down to 100? After you added on to it and everything, I said, does that get you angry? He said, no, because every time it comes back to 100 and I take a small loss or a small flat, that same thought process, when they don't come back, I make 10 times. So he's got, in his mind, he's got a definitive way of thinking about it. And if you think about it, that makes a lot of sense. It makes a lot of sense. It's a math number. Math. That's it. So definitely give yourself, if you, it sounds like you really, really know what you're talking about. Give yourself a chance to enjoy trading, and however the market unfolds, let it unfold and trust yourself to do what you're supposed to do. All right, just got a couple of more here. Most important challenge is following through on my ideas. I do my homework, have my criteria, and I still do not follow my ideas through. In my opinion, this means you don't trust your plan. If you trust your plan, you'll follow it flawlessly. At least that was my experience. When I was still trying to figure my plan out, I didn't follow it flawlessly because I didn't believe it would work over time. As soon as I believed it worked over time, I never have a problem following it because I either believe it works or it doesn't. And if I don't believe it works, I shouldn't put money on the table in the first place. I probably shouldn't even be trading at that point. What do you think?
Yeah, I definitely agree with you.
So again, if you're not following your plan, it means that you don't believe in it yet. Because assuming you're willing to follow it, and you're still not following it, that means you don't believe it works. And if you do believe it works, that means you don't trust yourself to follow it. So that's more of a mental thing. You either don't believe it works or you don't trust yourself. All right, next, set out to, actually, no, I'm sorry. Just covered that one. Managed to screw up most days. That's a powerful statement. Friday, I liked the short. The market was strong. I liked the short, but the market was strong. I told myself not to trade. Okay, that's a lot in just two sentences there. I still shorted and lost. Okay, like the short, the market was strong. So right there, you're fighting the market, so you're not paying attention to the market. Just as a quick aside, if we're sitting in the room together, you need definitive criteria to tell you, is today a buy or a sell? And it's something as simple as just two columns in your stock watch. Positive from yesterday's close, the net change from yesterday's close, and the net change from today's open. Just that alone will filter out whether or not you should be long or short, just as a minimum. And if it's on the other side, don't fight it. I still shorted and lost. Monday, I liked the long. SPY, I liked the long, but the SPY was negative. I told myself not to trade, still not long, and lost. Okay, this person clearly has a problem with following what they want to do. I don't remember if it's the other person, but either way, let's assume it's somebody completely different. Again, getting back to the same issue, you need to follow your plan. And that means that if you're not following it, it means that you don't believe it works. And if it doesn't believe it works, do something as simple as you see on the screen for myself and Marion. You guys that are in the room with us, you see what's on our screen. We're not lying to you. We're showing you what's actually on the screen. This is the screen that I trade on. That's it. Other than cycling back and forth between the market internals and the execution screen, that's it. I don't have anything complicated on there, but I do have definitive stuff. I have the opening price. I'm looking to see where the longer term support and resistance levels are. That's it. I'm not making it more complicated than that. And once you trust it, then after the market opens, you're just looking for ideas that confirm what you want to do. But you can't be battling yourself like that. Trading is challenging enough when you completely trust yourself. If you're not following your plan, and especially if you're saying the market's going in one way, but I'm trading in the other direction, you need to really sit down and say, this is how I'm identifying if I want to be long or short, and I'm not making it more complicated than that, and stick to it.
Also, when you come into the day, I mean, a lot of times Pete and I will say we're biased short, we're biased to the long side, we're biased, bullish, bearish. But even no matter what we do, we're not getting into a trade no matter just because we have a bias to that side. And we're really fine with switching what we think. You can't come into the day saying, I really like the market and be looking for the long as the market's tanking.
I did that last Friday, Marion. I made it clear last Friday I wanted to be short.
Right.
And the market opened higher. It kept going higher. And I'm like, okay, I'm a buyer. Let me see what stocks were in my long list today. I'm a buyer. There's one thing. The market could be, you can have whatever opinion you want in the market. And again, go back to reminiscence of a stock opera. He makes it very, very clear. I think they were talking about cotton, even though we're talking about stocks. The guy said, I'm bearish on the market, but I'm buying. And the guy goes, why? He goes, because prices are going up.
Right, exactly. So you can come in, because obviously you've done your homework if you're coming in with either a bullish or a bearish bias. But then you have to know that you've got to follow price action and let that tell you where the market's going, not what you believe.
Which is also why we have stocks on both sides of the market. Marion and I don't go over both sides of the market just because we want to fill up time in the morning. We go over both sides of the market in case the market changes from our bias. You still want to be able to make money. If I come into the day want it to be long and I'm looking at my long strong, but if the market goes down, I want to have a list of shorts. I don't want to be scrambling for shorts at 10:20 in the morning. I want to already have that list. Let's see. Be profitable and more confident in my decisions. Again, we have the confident factor in there of how you want to feel. Well, I can tell you this: you're certainly confident when you're profitable. There's no question about that. But again, confidence definitely comes from, first, really believing you know what you're looking at. Second is proving to yourself you can follow it. And third, you have consistency in your profitability. And the person before wrote 1.5 months. Could be a month and a half, could be 3 months, depending, whatever it is for you. But confidence and consistency comes from your plan first. And then when you prove you're confident that you could follow it, consistent profitability should come from that if you actually do have an edge and you follow it flawlessly, which especially means managing the downside and then getting to the other side where your biggest problem is holding good trades too soon. Let's see, translating longer-term information and chart action into profits intraday without losing money on intraday price action noise. When should I expect a pullback, or when should I re-enter position? This last part is actually pretty simple. We covered this a little bit. When should I expect a pullback, or when should I re-enter? This, again, what has the stock done the last 3 to 5 days? Is it exploding to the upside for 3 days in a row, 4 or 5 days in a row, or is it going up for 2 days, consolidating 2 days, going up? That's the stuff you got to pay attention to, because that longer-term perspective on the daily charts and even on the weekly is going to give you an idea of how much, and also how much room to go is there. All of that stuff will matter. But I will tell you this: it's higher time frame for the idea, shorter time frame to time your entry, and then longer time frame back to determine how they're going to hold that trade, because you don't want to get shaken out on a 1 minute candle. Marion actually does a really good job of noticing that. She's like, yeah, it was one candle back, but no volume trading, that kind of thing. So you're looking at the longer time frame. So it's higher time frame, shorter time frame, higher time frame. Tough to stay on just that one time frame. And we've got one more slide. Knowing when to trade heavier and what to do with trades that have a monster run within the first couple of minutes that don't give any entry signals.
A monster run that doesn't give any entry signals, then you don't get in. You wait for the pullback.
Exactly.
I think we often talk about this with earnings. A lot of earnings do exactly this: a monster run up, a gap up, and a monster run. Then I always say, wait, be patient, wait for the pullback. They always pull back.
Yep, and you also say, we go over it a lot in the morning, also, Marion, where I throw it out to you, and I'm like, well, would you get in here, even though we like the idea? And you make it very, very clear. No, I'm waiting for the signal. I'm not going to jump the gun. I'm going to wait for it to give me the signal. And there's a little bit in this question here too of it exploded in the first 20 minutes, and I missed most of the move. Therefore, I need to be in the stock now. I understand that, but you have to let it go. You have to wait for a signal that makes sense. There's really no other way to word it. We've all been there. You look at a stock, I'm like, oh gosh, when $1.50, it did exactly what I thought it was going to do, and now it's going sideways for 4 hours. It is what it is. If
something can also run up, and then you got in, and it's $50. You got in, and now it pulls back to 48, and you're like, oh my gosh, because you got in with everybody else. As some of people were actually getting out of their trades. Yep.
And when to trade heavier is also pretty easy. I mean, that's really, we run through the progression all the time, every day. Maybe I'll make a quick checklist and just give it to everybody, but really boils down to is whether you go from top-down analysis or whether you start with the stock. There's a ton of stuff you can add to understand how much room to go, how much did it move the last 3 to 5 days. What other stocks in the sector are they doing the same thing? Are they doing the same thing on good volume? Are all of them above the open? Are all of them above yesterday's close? Are all of them above yesterday's high? Are they all trading above average volume? Is the VIX going down? Is the trend going down? Are the ticks printing plus 1,000? And is the market all in sync with everything we just saw in the stock? That's when you learn to trade heavier. When the more of that is in the equation, and again, heavier is relative. It could mean more position. It could mean more share size. It could mean multiple positions. So. And it could just mean hold longer as well. So heavier doesn't necessarily always mean more share size. It could just mean I'm not getting out, that kind of thing. But you need some criteria to tell you when the situation is better.
Right. So if one thing is going with you, it's okay. Don't get in more. 2 things, 3 things, 4 things, get in more.
Yep.
If
Exactly.
everything is lining up, then you want to get in. But don't just do it because, oh, this stock is going higher, but oh, the market's going down, everything in the sector is going down, but this is still strong. And that's fine if it's still strong, but probability of it going up a lot higher are really pretty slim.
Yep. Exactly. Exactly. All right, Marion, that's everything. I think we covered a decent amount here today, just over an hour. Thanks, everybody, for participating. Once the video is done producing, I will make sure that we have a link to it, and I will make sure that the audio is pulled out as well before the end of the week for everybody to download as well. So, Marion, thanks for taking the time, and everybody else, thank you very much. Appreciate it.
Okay, thanks. And if you guys have any questions, write or ask in the room, because some of these are great. And if you're confused at a certain point, say, oh, I really want to get in, or do I get in more? So we'll go over it.
A lot of the questions seem to be trading plan related, and even if you don't sit down and write a full blown trading plan, at a minimum, you need some kind of criteria to tell yourself, this is where I believe my edge is, and this is how I'm going to manage a trade. At a very minimum, if you are very definitive on just those two things, this is how I define an edge, this is how I determine if it's too late, even if I want to be long or short, and this is how I'm going to manage the trade after I get in it. You'll find yourself, again, that the terminology of confident, comfortable, all that kind of stuff, that starts to come more comfortable when you feel more comfortable with what you're looking at. So if you guys need some help with that, by all means, please shoot over emails like Mary said, or especially ask in the room. We'd more than happy to go back and forth and help you guys with that. So thanks again, Mary, and everybody else. Have an awesome day.
Bye-bye.
Bye-bye.